All right, welcome back. This is going to be a Sunday update for the 3 engine challenge. So this is about week 6 of 52. And today I got a lot to cover because I want to make sure that the full system is crystal clear. Not just what happened this week, but exactly how the money flows into this portfolio, how the automation works, and why drip is one of the most underrated tools you can set up. All right, so here is kind of a quick status board. There's 4 boxes here. So on the top left, you can see that the 3 engine portfolio is running, and notice what it says underneath, that drip is on all the ETFs in the engine. So I'll explain that shortly, but we'll look at the next box here. The top right, the wheel strategy. I had deposited $3,000 initially a couple weeks back, and I was going to get started on this last week, but I didn't yet. So there is $3,000 in there just waiting to start the wheel strategy. If you look here at the bottom left, that's DoorDash income. So that'll come in randomly, just as I earn it, not weekly, not on a schedule. So when I make money, it'll go in. So I made $30 last week, and I'm gonna put that in tomorrow on Monday. And then on the bottom right here, this is one that I really want you to notice. So this is the $90 auto invest that I talked about in the earlier videos. So every Tuesday, this is automatic. So it never stops. And it comes straight out of my personal account every single week without me doing anything. And then the bottom bar there is April 25th, 2027. And that's going to be the end date for the full year of this challenge. Not that we're going to stop it. It's just going to be where we're going to measure things more. And that doesn't stop. Okay. So 2 things on this slide. First, the delay. So my regular job keeps me pretty busy. So I was going to do my first wheel strategy trade on Friday. And I was going to put it into American Airlines. But I didn't get to that. But that's okay, because this is going to run for 52 weeks. So one missed Friday is not going to be a big deal. And I'm going to either do weekly, or I was thinking more do 30 to 45 days out on the wheel strategy. And so with the $3,000, if I do American Airlines, I think I could do another one. I'm thinking about doing American Airlines and Ford. And then second, and more important, the green box at the bottom. So this is the small account wheel strategy. It's going to start with the $3,000, and that's real money. It's not a demo, and it's not paper trading. And so will I add more to this account? Yes, I'm probably gonna do that, but as I can. So there's no fixed schedule for that. It just runs on what's in the account. So we're gonna keep that account small, but if it grows, we'll kind of expand from there. And then we're gonna track this every trade that we do publicly. So the right side of the slide here, you can see, breaks down how the wheel actually works. So if you're new, what you do is you sell a cash secured put, you collect a premium, and then you repeat. You get assigned shares, you sell covered calls, and you collect more premium. So it just wheels between these 2 phases. That's pretty much the whole strategy. And I'll talk more about the wheel strategy once I go into it and make my purchase. Next slide. Okay, this slide is the whole system laid out at once. So I want to spend some real time on this because I think this is where there might be some confusion. So there are 4 ways that the money comes into this portfolio. So you look at the 4 boxes. The top left, the $90 every Tuesday is automatic. So this is the foundation. I started off with $1,000 into each engine as well. And then from there, we set up the automatic deposits of $90 every Tuesday. And this will come straight out of my personal account. So I don't even think about it. I don't have to decide it. I don't have to be motivated that week. It just happens. And that's kind of the whole point of automating it. It removes the willpower from the equation entirely. So I don't think about, oh, maybe I got to, pay this bill, or I want to use this to go out to breakfast or go out to lunch. It takes all that away. So the top right here, you'll see the drip is on all the ETFs. So this means every single time that one of the ETF pays a dividend, that money automatically buys more shares. So I didn't have to do anything after setting that up. Just more shares means slightly more dividends next quarter or next month, or in, I think it's AIPI, last week or the week before, went from monthly dividends to weekly dividends. And I'll talk about that more probably later this week when I show the deposits being made and the actual differences between those three engines. So those dividends will kind of compound over time. So you see the bottom left, this is the DoorDash. So this is more random. It's going to be kind of as I earn it. Whenever I can go drive, I make money. And then that'll go in. If I don't drive, then nothing goes in. So $30 from last week is going to go in on Monday. And that's it. And then the bottom right here is I plan on selling items that I don't need. So when I sell something on, say, Facebook Marketplace, eBay, or wherever, a yard sale, that money's going to get split equally 3 ways across all the ETFs. So no decisions and no time in the market. So the rules are going to already be set. And if you look at that bottom bar, the 3 engines, there's the growth, the income, and the safety net, and they run constantly. So the $90 Tuesdays will just keep feeding right into that. The wheel is kind of a bonus on a small account. I'm just going to see how that works as well for the year. And we'll just kind of do that right alongside the long-term portfolio. So that's kind of the mindset. The $90 never stops. Everything else is just a bonus when it happens. All right. Let me spend a minute on drip, because I think a lot of people either don't know about it or didn't realize how powerful it is over time. So DRIP stands for Dividend Reinvestment Plan. And basically the name says exactly what it does. Every time one of the ETFs or one of your ETFs pays a dividend, instead of that cash sitting in your account doing nothing, it automatically buys more shares of that same ETF. 3 reasons this really matters. So one is it compounds automatically. You set it once and run it forever. You just kind of keep it going. You don't have to log in and reinvest manually and put the money where you think you want to put it. This one just automatically happens. So more shares equals more dividends next quarter or month or weekly in some cases, which buys more shares, which pays more dividends. So it's kind of just a big loop. 2, it kind of removes the emotion out of it. You never have to decide, should I invest this or keep the cash? A lot of times I would want to take the cash out and just spend it, but I just let it sit in there and just keep moving. So that decision gets made for you by this system. So no second guessing, no waiting for a better price. And 3, it's going to accelerate over time. So early on, the extra shares look really small. So maybe you're reinvesting $2.50 and getting a fraction of a share. It seems like not a lot, really. But over months and years, those fractions add up to real positions. So this is a compounding that you hear people talk about a lot. And you don't really see it till you start looking back at your account. So let's look at the example there on the right side. Let's say you own 10 shares at $50. That's $500. And let's say that ETF pays you 25 cents per share. You get $2.50. So the drip buys 0.05 more shares. So next quarter you earn slightly more, or month, or even weekly if that's the case. And then you just repeat that forever, and that way the number of shares that you own keeps growing without you buying a single one manually. So then all 3 of these engines, all 9 ETFs, all have drip set up on them. So it's just running right there in the background. Okay, so every dollar has a job. So this slide here is the whole system in one view. So I want you to take a look at this and just kind of let it sink in. So we have 4 income streams at the top. We got $90 on Tuesday, and that goes into 3 different ETFs and 3 different engines. So 9 ETFs altogether, so $10 into each ETF. We have drip set up. the dividends buy more shares automatically. We have DoorDash, and we have selling items. So all four flow down into the three engines: the the growth, the income, and the safety net. And then the dividends from those ETFs loop back right through the drip program, the drip, and they buy more shares automatically. So the money comes in from four different directions, and so none of it's very glamorous, and none of them are like picking a hot stock or perfect timing. They just kind of run. So $90 on Tuesday is always on. Drip is always running. DoorDash, whenever I happen to do it. Selling stuff whenever it happens, yard sales or Facebook Marketplace. But every dollar has a job, and that's the true system. Okay, so every now and then, some friends from work or some friends will and I will just be talking, and I'll get the question. So what's your target? What goal are you trying to reach? What return are you shooting for? So actually, for me, there's no fixed dollar goal, and here's why I think that's the right call and not the lazy one. So I'm not chasing anything. If I told myself I needed to hit 15% this year, I'd start taking trades that I shouldn't. I'd start gambling more, and you shouldn't gamble when you're investing. If it starts to feel like gambling, it's probably the wrong thing to do. So I think if I set up a target, that would start making me try to make decisions to get everything to work towards that target. So the process is going to beat targets on a small account every time, I think. But I need a full year to see what these strategies actually are going to do in real conditions. A couple of months in a good market doesn't tell you anything. I want to see this through a pullback, through a flat period, through earnings volatility, and that's where you find out if something actually works. So this is going to be kind of a live case study. Everything is public. Good weeks, the bad weeks. The number on April 25th, 2027 is going to be what it is. I'm not managing toward any target. I'm just running the system and reporting everything. So after 1 year, I'll either keep it, tweak it, or pivot. The data is going to really decide, not hope. All right, next slide here. So for anyone that's new, so here's what the three engines actually are. So engine one is growth assets. These ETFs are designed to appreciate in value over time, like VTI. Drip is on these. Dividends are going to be automatically compounded. Engine two is income. These are dividend-paying ETFs that generate regular cash flow. AIPI is one that I use in there, and JEPQ. And then we have the safety net, which is engine three. This is more stable, lower risk ETFs that protect the portfolio during downturns. So I got some bonds in there, USHY, IBHF, and I also put in SCHD in this one. So this is kind of the anchor that keeps the whole thing balanced. So the three engines have three different roles. Growth builds wealth over time. The income is going to generate cash flow, and the safety net protects against volatility. So we'll kind of see how these all do at the end of the year. So, and then separately, the wheel strategy runs alongside, kind of as a bonus to show what a small account options trading looks like in real time. I've heard people talk about it, but a lot of the options trading that I see is with a lot larger accounts or with a lot of margin. So it's not one of the three engines. It's just an addition. Okay, so here is where we are on the timeline. So April 25th, 2026 about is when the challenge started. We put $3,000 into the wheel account a couple of weeks ago. And then ever since we started the challenge, $90 has been auto invested every Tuesday. And that's turned on to just auto invest. Drip has been activated in all the ETFs. So now we're in about week 6. The auto $90 has been hitting every Tuesday. The DoorDash money's been coming in as earned. The wheel I'm going to launch this week. And then I also believe that last week the markets on Friday took a big hit and they dropped down a lot. I think there was a lot of sell-offs. In my opinion, I think they were selling off so they can maybe get ready to buy some SpaceX. That's just my personal belief, in my opinion. So I'm kind of glad there's some sell-offs because it kind of gives me opportunities to buy in at a lower cost. And I'll make sure that I show you those trades if I buy at a lower cost, or what the $90 auto buys as well. And so then by April 25th to 27, we'll have the 1 year review. So we'll look at the real numbers and decide what's going to come next. So we're about 11% of the way through. We've still got a long road ahead, so that's good. All right, so that is the week 6 update. Slow, steady, system driven. The $90 goes in every Tuesday, whether I think about it or not. The drip reinvest dividends, whether I log in or not. The DoorDash money goes in. When it comes in, I actually have to transfer that from my account. And then the selling of any items that I might sell, or any extra money that I make somewhere, I'm going to split that up automatically as well. So none of this is complicated. And none of it requires perfect timing or a hot tip. It just requires setting up a system, so getting started and letting it run. So I'm going to try to post twice a week to show updates, either on the wheel strategy or on the 3 engines, or both. And just provide some education or things that I've learned, that, or maybe that you all are teaching me. And then I'm hoping to do the wheel strategy tomorrow. But we'll see how the market turns out. And then, as always, please read the disclaimer on the screen here. Nothing here is financial advice. I'm not a licensed advisor. This is a real personal experiment shared publicly for educational purposes. Options trading has its real risk. You can lose money. Drip and auto invest don't eliminate any risk. They just automate a process, and they don't guarantee results. So talk to a qualified professional before putting your own money to work. So hope to see you on the next video. Thank you.